mark out the high and the low with the first 1 minute, or the high and the low with the first 5 minutes, and then we're looking for price action at any of these key levels. So it might seem a little confusing, but don't worry, we're going to map this out on the trades. You'll be able to see it on the charts. But it's so important that when we're thinking about what is happening around these key levels, we're a break and retest trader. We're not a breakout trader. We're not looking for a key level to just break, because there could be a lot of times where you get a fake out break, so it doesn't actually go the direction you want. You get faked out. They call it fake out liquidity. So you think that it's gonna be breakout, go straight through and continue to push higher, and then it doesn't. Sellers are sitting right at that liquidity zone and those key levels when you're trying to go bullish, and they end up pushing the price down. Or on the flip side, you're trying to go bearish and buyers are standing right at that key level and that liquidity zone, and so they're trying to push it up. So I find to have the lowest risk entry and the highest probability of winning, I'm looking for a break and retest. This is just what I've grown to be accustomed to, and it works out the best for me, and it's something I can see consistently on the chart, and I'm constantly training myself to only look for this and not anything else. The worst months that I have had trading, I look for other strategies and other key levels, and I try to make things up on the charts. It's so much more simpler when you're looking for one thing again and again and again. Trading should be boring. If you're getting cute with trading and you're getting too excited around trading, that's when you make emotional mistakes. And emotional mistakes can cost you a lot of money. So it's really important to make sure you're looking for one consistent thing. Break and retest. On the left, we have a bullish example, and the blue lines, all those represent are where these key levels are. So when we've identified a higher time frame breakout, we've identified some liquidity, some momentum that's building intraday, specifically in the first hour. I only trade in the first hour of the day. Specifically around that time, we're looking for some good momentum, either to the upside or the downside, to show which stocks have relative weakness or relative strength. We break through a key level, as we see over here on the bullish side. We come back in, we test that level again, but we have the proper price action at that level, and then we see it continue. So we're playing a continuation pattern. Same with the bearish moment. We move down past the key level, we come back in, we retest, and then we push down further. And effectively, we always want to make sure we're waiting for candles to close. This is such a key thing. We get into our level, and then we set our stop loss, our take profit at our other levels, and then we are looking for candle closures, right? So if a candle doesn't close past our stop loss, we're not getting out of the trade. We're not getting out of the trade or taking our final scales or final profits until we actually hit our take profit. And the last piece that's really interesting that you need to make sure you're always looking for is price action at these key levels. You can draw out all the levels you want, but you need to make sure you're looking for the right price action, the right candles that are telling the right story at those key levels.